Mic check, 1 2 1 2. Happy Thursday, everyone. I hope you're well and doing great wherever you are in the world right now. I am so glad that you're here. We're going to do what we always do. We're going to do what we always do around this time. We're going to get to work. We're going to make sure that we put the work in. I know that we may make it look easy as far as knowing when to be in the market, when to be out, what side. There's nothing easy about this. CTM, Hivemind, absolutely the best team there ever was. What a journey to be here with all of you. Let's get to it, right? We are looking, and we're going to start off just looking at the Nasdaq over here because it's really fun and interesting to see it breaking outside of this rising channel, right? Breakouts outside of rising channels tend to be one of two things. They either lead to some pretty strong moves. Those moves often wind up being, let's say, the peak of intermediate trend, and as well as they could also be fake outs. They could also break back above and then crunch down. Now, this is looking entirely positive. We all know, we've all been in front of it. I just want to point out one of those occasions where you could see in this area over here, we see this rising channel. I don't remember exactly how it looked like that. Yeah, you see the rising channel. If I go ahead and I clone this line, it's going to come back below. And I guess this is where we're starting off. So let's get into it, right? You can see that channel, and then there was a breakout over here in November to the upside. That breakout was just a quick grab. Now, this was a short one. There's no question about it. Took us back down. That wound up being the very top. I think I could go back and look at another one, and let me see over here. And I'm trying to find out exactly where that is, and no, I don't see it. Oh, here it is. Sorry, I'm just trying to point out some important stuff over here. And maybe this is an example, maybe not. I mean, obviously I'm not too tuned in over here, but you can see this breakout above, and it's a nice move to the upside, but it winds up being the top of I don't even say intermediate. This is only about a month before it regained. Point taken, I hope. Point expressed, point received. And even still, we continue to monitor the beautiful breakout that's occurred out of the bear market trend, right? That was the signal to take. And then the signal to exit, if you're going to exit prematurely or early, was if there was a breakdown of this channel support. There never was. And now it's breaking out to the upside. We could go ahead and we could add in a new line over here. And this, I'm going to draw in two lines, or I drew in two lines this morning. The first line I'm drawing in is a trend line that is sloping upwards like this. You can see that price is into that resistance right now. And price is also into some horizontal resistance as well. I have a touch over here. I have this as support. I have this as support. I have that as resistance. If I go back further, right? So that line, I could say, all right, let me just go ahead and clone that up a little bit. Bring that down. And what I'm just looking to touch over here. Over here. And then again over here. And I could see, oh, well, over there, you got some touches. And there it's support. And there, even though that's where price didn't close above, it wicked up into that line. And I think that that's a good area, this little pocket over here, for us to be focusing in on as right now as resistance from where we are here all the way up to the whole number, psychological, I assume, 13,000 on the Nasdaq. And ideally, or the most bullish thing that I think that we would see would be price in this area consolidating and then breaking above. That would be the bullish. Now, even if it just shoots above and just like this rocket of short covering, of money on the sidelines, chasing, and whatever there is that potentially propels this higher above this resistance now, above this resistance, we would then be looking for price to come back in and retest either this first level or this second level, right? And then look for a resumption up higher. But this type of move is fierce. It's fierce coming off because Jay Powell was perceived to be a little bit dovish. He was happy that he could talk about the beginning of the deflationary phase. And of course, he, like everyone else, is skeptical about how long it lasts. And there's, a lot of caution ahead. But the turn in central bank policy continues. Speaking of which, I do remember, and I don't remember the month where it occurred, but somewhere in this area, we began talking about watching first the Bank of Australia, then the Bank of England, then the Bank of Canada, and they were starting a lesser degree of rate hikes. And we said, well, I think this is the direction that the Fed is going to be going in. Fed came in with 50 basis points and then 25 basis points. We have another one of those turns today, and that is, I'll show you the headline first, and that is, there we go. The pound tumbles, British pound tumbles after the Bank of England hikes 50%. Wait, I thought rate hikes are always bullish for the currency. Not when it's the last one, though. Not going back to December 2018, Federal Reserve hikes interest rate. That's where risk bottoms. That's where Bitcoin bottoms. Weeks later, they pivot. They signal a pause at a lower rate of 4%. So Bank of England have been talking a big game about wanting to take rates higher because they're going to get inflation under control and blah, 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 blah. And at the end of the day, they wound up, hiking and then signaling that a pause at a lower rate is in store. I wonder, I don't know, but I wonder if that's what's going to happen soon for the Fed as we look at, or I just want to take a quick look at what expectations are now currently today after Powell's meeting yesterday for the March 22nd FOMC meeting. And we're looking at a 14% possibility of a pause. Interesting. But we're looking at an 85% chance of another 25 basis point hike. This Friday, not tomorrow, we have non-farm payrolls. That is going to change how this is being priced in. And then, of course, we have CPI coming up. That's going to also change again how this change. Because this meeting is late into March, we're going to have two more data points. When I say two more data points, I mean like two more CPI readings, two more non-farm payroll readings. And those are not the only things that matter, but those are two of the highlights that will really change up what we're looking at coming into the March meeting. And if we continue to see things like how is oil reacting today? Oil's down. Not only is oil down, look at that. Oil taking out the sell impulse line over here. It's not what I expected was going to be happening. My expectation of what was going to be happening as we're seeing risk rally here is that oil was going to be rallying also. This is why you trade what is happening. Talked about a buy entry occurring over here. This was the stop loss. Now it's pierced and it's pierced quite below. I personally would have that's not the best TA. I'm going to leave it as it is because if I do that, it doesn't change anything whatsoever. But either which way, that is at least taking out stops. A close below sets up the sell impulse, no doubt about it. And that is something, if we see a further continuation here of actually energy prices coming off, that's going to make the Fed's job a lot easier. Because contrary to popular belief, what the Fed is trying to do is they're not trying to break things. The Fed is actually trying to keep the music playing as long as possible. They do not want the music to stop. And if it does stop, they need to come in and they need to bring in like new speakers. And that's like an ejection of quantitative easing. That is expansion of their balance sheet, buying all securities. They don't want that to happen. If that does happen, they have no other choice but to step in, but they don't want that to happen. Powell would love to see energy prices come off further. I don't think it ends here or it's that easy. We have to continue to watch to see if, I mean, it gets easy if we break out and take out the low. But if we start seeing oil prices come up, we're going to have to continue to stay on the right side and make sure that we don't get chopped up in the process. So how could we avoid getting chopped up? At this point in time, actually where my mouse is, I was seeing if I could find a line. The line was going to look something more along the lines of like a sloping upward channel. But I'm focused on this area of support. This area then became resistance. Here again, let me draw on the line like this, right? I want to look where this line is, the one that I've highlighted below here. So I see, sorry, I'm just trying to get my bearings here and figure out where exactly all this support is. I'm going to come off over here off this resistance. It comes all the way into that area again, right? So 85, and then we have this one area over here. If I extend it out this way, that's also a line of interest. So a lot of overhead resistance to work through over here, right? So I'm just trying to keep us from being chopped out. However, even though this line up here is resistance, let me make it lighter. Let me explain to you after I get it all in, right? So even though that's definitely a line of resistance over here, here's where the market right now is resistance, resistance, and that is where we're paying attention to. Let me blur this one down a little bit, right? Just make it lower. This is the line over here that we're going to be looking to get clear back above in order to avoid being chopped out, right? Because we had a buy. This is the second one. There was one over here, right? Buy, and then that failed. Second attempt, failed. Close below here. It's a sell impulse in a downtrend, looking for a continuation to take out that low, going even further. So that's like the trade in play. And then what I'm looking for is what happens where you're wrong. And that's going to be up here above $82. Above 82, that should, why there's resistance over here, that would be where we would be looking to position ourselves for stronger or higher energy prices. Great morning, everyone. Great to see you. Yep. So, higher for longer, but watch what they do and not what they say. And that's why we're looking at the Bank of England today. And the Bank of England, why they were saying they're going higher for longer, now they're not. So it's just interesting, and we're just going to keep doing what we do and try to stay in front of it. And did you see FNGU? I took the TQQQ, and not that I'm not happy, I'm astounded. But I know Michael got the FNGU as the first trade. We'll get to that in just a moment. Just wanted to make our way through, taking a look here at what we'll call, it's the macro, watching over here, the dollar. Look at that puppy riding down into our support. Look at the support you see over here. It's a rising trend line sloping upwards right into the support. That's a major level. That was the level we said that we were looking for price to come down to if we broke down below this one here. This was like our mission accomplished on the last breakdown. And then when we broke down below, as long as we didn't rise above this line, this is where we were looking for a resolution. So that means right now we have to watch this line, price coming up into the resistance, to see whether or not price breaks above. If it does break above this buy impulse, it has resistance right above it. So I personally would not be looking or calling for a potential reversal in the dollar unless this line up here was broken. All right. We're going to be continuing this each day. So I just want to make sure those that are listening and paying attention continue this ongoing education in this way. If we are rejected in this area and break down below, now this becomes our target area. That is right now around 99.50. I tweeted Brent at the top over here, and I was like, hey, Brent, are you going to let everyone know when you think that this round of that dollar strength is coming off? All right, so what else we got going on over here? Let's take a look at the markets. People might be wondering, whoa, what's going on here? Equities outperforming crypto. I mean, the way that I view that, right or wrong, is that we've just seen a massive move over here on the Bitcoin. When I say the Bitcoin, that includes all of crypto, right? But Bitcoin here, beautiful 50% move, greater than 50% move off the bottom over here. And it was playing catch up, I believe, to the equity markets. It was playing catch up because Scammy Sam and FTX debacle really, I think the low would have been over here. I mean, I'm very confident the low would have been over here in September had it not been for the fraud that took place, right? And either which way, we saw a big catch up by Bitcoin. And now after the public markets, the stock market in the US is a rather gigantic market. And there's a lot of participants and there's a lot of repositioning going on. And it makes sense, in my view, in light of yesterday's events, to see equities here leading to the upside first, and money, right, being put in to that side of the equation. Crypto's just had a nice run up. It will continue to do well and have its time, but let's take a look at CTM positioning, and we're looking at Bitcoin still remaining on the sidelines. It's had a beautiful start to 2023 in January, no doubt. Now it's up to February, and it continues waiting over here. It's not chasing at this particular moment. I am super happy and comfortable with that because the beautiful dance continues. Ethereum has taken a new long trade after closing its first long of 2023, and that trade is just now getting started. And Cardano, which held through the FOMC, is now holding an open position 4% into profit. It is the beautiful dance, and it's really like, the more you watch it, the more you see events take place in real time, the more you see and understand how you would position discretionary, and then you watch how CTM 2.0 does it, the more, let's say, faith, trust you're going to have in CTM. I highly recommend anyone is just starting out, because you don't have the same advantage that CTM Core has. CTM Core has been since March with CTM 2.0. Throughout all of 2022, there was a handful of new participants that were allowed into CTM. Those, OG was one, TK3 another, and those new participants were able to, because the majority of the group of the core here was able to integrate really well. People that are just starting out in CTM are being handed like the roadmap, the fruits of what we have, but they don't have the advantage of that time spent not only with it, not only understanding it, but that's like, experience is irreplaceable. So why you could say, hey, listen, your best opportunity to ever achieve success in the markets, in my opinion, is to follow the educational resources roadmap that we have outlined, planned out, provided for you, and are trading ourselves. These are our core strategies, what CTM has access to, right? Now, I know that there's other progression and works and designs, but our core, what we actually execute off of, are the same things. It's going to take time, but yesterday is just another advantage, and then time continues. When you're looking at this, or by the way, some people are calling this the beautiful dance. I mean, to me, the beautiful dance is how they interact with each other. How, if they're all three long, all three short, sometimes they're hedged. Many times Bitcoin has been long or short, why Ethereum is the other position. That happened a lot coming into the bottom of June, mid-June, into early July. I'm going to, as you see, I'm constantly working And one of the things that I would like to get into our dashboards is also this template here. I know in one of the most recent sessions, I made this available to you. This is, you could visualize, this is a trade taken. The way TradingView does the account performance is showing you on a closing trade basis. I like that a lot. The way the Moat does it, at the mother of all templates, it's doing it intratrade. And it's also visually really great to see the advantage of trading multiple assets, or the three that we've chosen as preferred. Right here, for example, you see that Cardano is going sideways here for months. This is common. This happens all the time. Sideways. And why Cardano's going sideways here, look at Ethereum right above where the cross line is. Ethereum's making new all-account highs. It happened over here in the last few months of the year. Bitcoin and Ethereum are going sideways, and here is Cardano making new all-time highs. And now as Cardano goes sideways, it's Bitcoin and Ethereum making new all-time highs. And you can see it over here, Bitcoin making new all-time highs first as Ethereum's going sideways. And I can't see in this moment what Cardano's doing, but it also was going sideways. And they each take their turn, and it's beautiful. I will get this available as a share template inside the member area for you, both on the 8-hour and on the daily time frame very soon. Then we have over here the dailies. I mean, wow, what good timing. CTM, right? Big shout out once again. Sale guy, Christmas present, Ethereum on the daily time frame. The first trade still holding 34% into profit. Cardano then, early 2000, first session, CTM session, January 4th, 2023. CTM proposes that we need to complete on the daily time frame by adding in Cardano. HiveMind spent the next 10 days or so producing 6 highly valued candidates, and then we dialed into our preferred settings over here. This also now in its first trade. Bitcoin holding 27% into profit. The daily time frame is an amazing solution for many people. Whether you're a busy mom, whether you are a providing dad, it doesn't matter. The daily time frame, there's one time a day there could be a potential new signal. You have to learn patience and discipline. And that means right now, if you're watching Ethereum shoot the moon here and you're not in that trade, you have to understand that, because there's only a few signals a year. There's only a few signals a year. If you're looking at Ethereum over here, this says, is this on the long side only? That's the long side only. So I have the wrong template up here, but it's not, it's the same thing. It doesn't matter. It's a buy entry. Well, this would be, if you're trading just the buy side only over the past 3 years, you're looking at 36 trades a year. Yeah, 2020. You're looking at 12 trades a year on average. Just the buy side. You have to have patience. You have to have discipline. So that means if you're not in a trade right now and you're starting with CTM, you are simply showing and executing that discipline, waiting for the next entry. If you want to and prefer, and you want to like discretionary trade and or experiment, open up a paper account. Do it. I highly encourage it. Do it. See how you trade against CTM 2.0. Continue to develop those skills and passion, but don't get confused and don't confuse others. All right? We want to build you up and make you strong and get you to the point where you could execute off of preferred settings and then continue to move forward in other ways.